now, right? But now the market's trying to fight its way back. Got seasonality on your side. Is it enough? Is it enough?
Maybe it's a tone change, Scott. I mean, really, maybe it's a tone change. Because I thought the same thing that you just said. I thought, oh man, this is like July, right? If this had happened in July, we'd open up down at 1.5%, and then we'd crescendo down during the day and end up down 3-4%. But that doesn't seem to be appearing what's happening. Why is that? Could be seasonality, but I think it's more than that, Scott. I think it's fundamentals. I think this is the probability of a soft landing is increasing. There's two parts to the soft landing. One is the economy hangs in there, and creating 260,000 jobs in the month of November is indicative of that. But the other part, which is far more important right now, is what's going on with inflation. Now, we're going to get that read next Friday. It's slowly coming closer on the November PPI. It's important because it's the first read of November, and it will determine whether those benign October inflation numbers were a blip or a trend. I think there's good reason to think it's a trend, that the PPI and then 2 weeks from now the CPI will come in better than expected. Whole host of reasons. You see what's going on with Zillow rents, with freight costs, with gasoline futures. I won't go through the whole thing. But also, if you want to track this in real time, the Cleveland Fed on almost a daily basis updates their inflation forecasts. It's been coming down. It's been coming down. So you simply put, the probabilities of a soft landing are increasing, and that's the reason for the tone change, I think, Scott.
All right, we're still above the 200-day moving average, by the way, on the S&P as well. 40.46 is what you want to watch. So we're at 40.63 as I see it here. So we've maybe, turned into a technical uptrend, according to some. That would be huge because we've been in a downtrend for I can't even remember. It's been so long at this point, right?
So maybe a technical uptrend, but I think that there's a really strong lid on that, a really heavy cap. And I think that's because things aren't really that great. And this is where Jim and I agree on so much. This we don't agree on. I'm not feeling as enthusiastic. I'm not dismal. I'm not really bearish, but I'm not enthusiastic. And I look at it and I'm like, all right, we've got a lot of negative things on weighing over us. We've got manufacturing PMI that's under 50 in every country. Mm-hmm. We've got retail sales that were nominally okay, but in a real level, there was no growth. We've got wage growth that is increasing, but not at the same rate that it was. We have the S&P valuation bumping up against levels that, I don't feel good about 18 times next year's earnings that we all think probably will come down is not super compelling. On the other side, there is positives, which is we're past the worst of inflation, as we talked about. We're past the worst of the Fed tightening. The tone is changing. So I just see this, and I think there's a cap on how high we can go.
Maybe those positives are strong enough to outweigh some of the negatives, right? I mean, if inflation is continuing to come down, if the Fed is nearing the end, that's pretty dramatic in terms of what the positives are relative to what the negatives that you suggested are, because maybe the negatives aren't as negative if the positives are what they are.
But then how high can we get? And this is what we keep coming back to, which is how much more. We're 15, 18% off the lows? Is it almost, maybe it's even 20% off the lows at this point. So how much more is there? And I think that as we position the portfolio for the last few weeks of this year and heading into next year, we need to be really realistic that I don't think there's a plus 35% ahead. I don't think we go back to the 4,800 and blow through it. I think your and my version of positive is not yesteryear's version of positive. It's just not that bad.
No, but that's fine. I mean, again, when we suggest that there may be positives or you could have an end-of-year rally, let's just be clear, because I don't want to do this every time.
Yeah.
We're not talking about 4,800 and back to the highs. Let's just be clear on that. I mean, we're wondering, okay, can we get to 4,100, Jason Snipe? Can we maybe even get a little bit beyond that? I'm not naive to all of the issues that exist, but if seasonality of November kicking off the best 3-month and 6-month period of the year for the S&P and December being the strongest month of the bullish period, that's got to get you somewhere. Plus, if you think that you've seen the worst of it from the Fed.
No doubt, Scott. So I think we're still in this kind of good news, bad news narrative play. Obviously, as we looked at the labor numbers this morning, which were hot numbers, but I take the other side of this. We could focus on labor participation rate decelerating. We could focus on the wage inflation still above 5%. But if I look at just job fundamentally, and this is kind of what Jim was alluding to, if you're looking at jobs being positive and you're thinking about a recession next year, maybe we avoid a recession. Maybe it's much shallower than we've all been talking about or feared going into next year.